What is up, everybody? Logan here again with another video. Today I'm joined with Credit Spread Investing, and he's going to talk about his journey with us as he's taken roughly $24,000 and turned it into over 100,000 just off of credit spreads. He started this account last year. Super excited to have him on. If you guys want to check out his channel, the link is in the description. He also uploads pretty regularly, just like I do, and you guys can keep up with the credit spreads that he's been running. So if you guys want to leave a like, a comment, and subscribe, that would mean a ton to us. How are you doing today, my man?
I'm doing well. Thanks for having me on your show. This is awesome. So I appreciate the opportunity.
Heck yeah, man.
Um,
Heck yeah.
yeah, I love what you're doing with your channel. I remember when I first saw your channel, I was like, yeah, this is kind of what I want. This is awesome, right? And so
No,
it's actually,
I'd love to hear that. Like,
yeah.
seriously.
I took $24,000 and I guess I made this account just to see if I can how much money I can turn the 24 grand into
Mhm.
with a couple very simple rules. It's trade only credit spreads. Um, have very strict entries criteria when you sell, and have very strict stop losses when you exit,
Mhm.
and then always close the week of expiry, and then make it as passive as possible, just to see how far we can take it. um, but yeah, it's kind of crazy. It's kind of crazy to see that how far the account has gone, um, from what it initially is. It's definitely increased in account value a lot faster than I expected.
Mhm.
So mathematically speaking, I never expected it to go from 24K to like 100K in like 6 months. That wasn't something I expected. That's pretty crazy.
Wow. So
Um,
6 months, and you're trading stocks like Amazon, Tesla, AMD. I think I saw in one of your videos.
yeah. Yeah. So I predominantly, like I think on the, I trade predominantly Amazon, Microsoft, Apple, Facebook, Netflix, Nvidia,
Mhm.
Square, Tesla hasn't treated me very well, but Tesla,
Mhm.
Salesforce a little bit back in the day, Adobe. Like I would say, just I've done Enphase, Zoom, whenever the opportunity presents itself. It's really based off of just how the charts of certain stocks look, and obviously some of the basic volatility in stocks. You don't want to trade a stock without like betas greater than one, for example, because
Mhm.
then it wouldn't move.
Mhm.
But other than that, like indices, SPY, QQQ, just all over the place, really.
Yeah, no, that's awesome, man. I know you've been doing really well with Amazon and even Microsoft, Apple. Like Apple's one of the ones I see all the time on your videos. So that's
Yeah.
great, man, because that's a lot of what I trade. Is just the big Fang stocks. Like we traded Amazon on Thursday into Friday. Had to put
Mhm.
credit spread on it, and that worked out really well. But yeah, I love that idea because I've watched some of your videos and you were talking about how you opened some about 3 weeks out from expiration and then close it the Monday or Tuesday
Mhm.
of expiration week for whatever it's worth then, which I
Mhm.
think is so cool because you're giving yourself enough time to collect
Right.
good credit, but it's not like you're further out than, let's say, 30 days or 45 days to expiration to where you're really not seeing much theta decay happening. So I like that sweet spot you're in, and I really want to start running some that are about that long because you get really good premium.
Right. Yeah, it's actually quite interesting too, because as the journey's kind of gone on a little bit, I've actually increased the time for expiration, the
Nice.
days to expiration, over the months actually. So in the beginning year, I was actually close to like 30, 30 days, and I closed the week of. Now I'm actually averaging close to 45, even
Really?
60. Yeah, mainly just because I feel like a lot of the times is the market's been rocky,
Mhm.
and so if you don't give yourself more time to let the market kind of play itself out, then sometimes you're just off by a week.
Mhm.
Um, right. And you're just like, oh crap, I missed a week. I'm off by a week or two. If I just waited another extra week, I would have been fine.
Mhm.
And so I take that less premium and just to give myself that cushion so that I don't lose those trades.
Yep.
Um, yeah,
No, that's great, man. And I know
yeah,
that you're a big fan of just taking the stop loss too,
yeah.
versus rolling it as well. But I do like that idea too of you just letting the market shake itself out because that's a lot of any issues. I think any, especially put credit spread, any sort of put credit spreads that people have been running because it worked all last year all the time,
Right.
and it's worked for the majority of this year too. I mean, we're in June and I've only had a couple weeks of crazy selling, like the first week of March.
Hmm.
That was a hectic one for selling, and even a little bit in May. You know, we had
Right.
that. pull back from all-time highs down to like 406 on SPY. So
Right.
yeah, that's kind of, it's cool. It's cool to see how you're trading it. And I mean, that's just nuts. 24,000. What was the collateral amount that you went in with the first time
Oh,
that you were like, oh my gosh, I made this much this week? Like, is there a specific amount that you didn't think that, hey, 30K could have made me this, you know?
yeah, no, I don't know, man. I feel like just the whole time from the beginning of this, because
I
like
love that.
I'll walk you guys through. I guess I'll walk you through the graph real quick,
Yeah.
right? I really only started trading this account right around like October here.
Yeah.
And so starting from October 1st, just to say, all the way up to this point in February,
Yeah.
it's been 100% credit spreads. So every time it expires, or every time at the Monday of, I would just roll it into other spreads.
Yeah.
And the fact that it compounds this quickly, it was just, I remember I had a Google sheet just on the side just to keep track of performance. I
Yeah.
was just half joking that I want to 100% every 3 months. This is completely a joke. I was like, it'd be cool if we could do that, right?
Yeah.
We did it. We actually it was 100% every 3 months. I was like, this is ridiculous. How the hell is it mathematically possible that like selling 30 to 45 day DTEs over a 3 month period, you can take 24K and turn it like 48, and the 48 to 96, right? I'm like, that's not possible, but
It's insane.
apparently it is. But that was just just like seeing those numbers and just like the overall rate of growth
Mm-hmm.
by doing something so passive is pretty great. Um, yeah, because like for this account, like you said, Logan, I opened up a spread for 30 to 60 days. Now it's closer to 45 to 60, but back then in the beginning it was 30 to 45. I collect premiums, and then I just let it go until either it hits my stop loss or it's the week before expiry. And if it is, then I close it and I keep going. Predominantly put credit spreads, just mainly because the over a medium to longer period, it's always smarter, in my opinion, to kind of trade the momentum of the market.
Yep.
And then occasionally, as the market overextends, then you sell some calls to kind of top it off.
Yep.
But those account for like 10% of the overall growth. But yeah, it's just kind of crazy. Like I forget the exact number. I think from the first time I hit 100K, I was close to 300K in collateral that I sold.
Wow.
Yeah, I was like, what the hell, right?
That is
Yeah.
insane, man. And what's your criteria when you're
Mhm.
about to hop into, hey, I like
Mhm.
Apple here. I'm going to put a put credit spread on
Right.
because I think we're going to bounce over the next 30 days.
Right. I think a lot of it comes down to, I guess, pattern trading. I'm a big sucker for price action.
Yeah.
And that came from like just, I would say, my previous trading experiences. I tried day trading. Sometimes it's not very profitable. Other times it's even less profitable. Um, and so like I think a lot of it comes down to just market psychology. I use moving averages kind of to give you like the overall momentum of the market, but I don't really use it very often to time my entries, if that makes sense.
Yep.
It's mainly looking at patterns, especially if, like, for example, a very prominent pattern that you saw on Amazon and Microsoft over the last 6 months is that it just channeled. It was
Yep.
flat between 200 and 230.
Yep.
And so if you see that channel between 200 and 230, there's no reason for you not to take advantage of it. So as it enters that 200 price point for Microsoft, you start selling puts. As it starts entering that 230, you start selling calls. And then I guess the main thing that I learned throughout this journey is just that you can never really predict the market, right? One day it can just really burst to 230 because you have an ascending wedge into that channel. But what you do is that you give yourself, I use ATR to I guess get to determine how far above or below the strike price that I want to sell. So ATR is just my metric. It doesn't really, it's not like anything scientific about it. It's just a metric that I use to gauge how much it moves. And so I use like one or two ATRs below or above a certain strike price to give myself that cushion. And it's basically just trading those patterns, right? If you see a higher high or a higher low into a newer high, then you can trade right below that previous low because you know that that's a new support, right? Especially when it's confirmed with volume. And so it's essentially just trying to trade patterns and then determining whether or not that pattern that you're seeing is a realistic, I guess, level confirmed by the market, right? If there's a lot of volume, a lot of volatility, then potentially that's a stronger pattern than something that you see with less liquidity and less volume. Yeah, I don't think it's anything like revolutionary or really hard. It's just trying to understand what the market's trying to tell you.
Yeah, no, I love
Yeah.
that, man. Especially when it comes to looking at the charts in general and getting a feel for, like you said, any sort of pattern that you see. If you have a really good feeling that, hey, this is strong support for Amazon, you could put credit spread on as close to that support line as you would like,
Right.
right? Instead
Right.
of like, okay, this is where the support line is. Let me go even safer just so I'm extra safe. It's like, well,
Exactly.
if you have the direction right already, why not collect more premium? And then as the market trends up or down and it's just bringing it in, you're going to be happier in that location. And that's why, as of recent, too, I've been taking, 15 delta right
Mhm.
upon entry so that I get a little bit better return than if I was entering like a 9 delta trade at that moment because of
Right.
the setup, right? It's like, well, the
Exactly.
direction of the market at that moment based on all your indicators, and here's a strong support level. Why not enter there? And then if you're wrong, you're wrong.
Mhm.
So
Exactly.
I love that whole philosophy behind it. And I mean, that is such a great way to build an account. And you only do credit spreads on this.
On this account, I only do credit spreads.
And then
Yeah.
every week you go in with the full amount of collateral. Like, is this account always
Mhm.
rocking the full 100 or 30 or whatever at that time, the whole time
Yeah.
you're
Predominantly, I've gone through certain periods like back here
mm-hmm.
where as it's oversold, because it's so far removed from like the 20-day or 50-day moving average on QQQ or SPY.
Yeah.
And that's where I keep a little bit of cash. But more often than not, it's predominantly just all in collateral.
Wow.
Yeah, because like right now in this account, I'm holding I think $100 in cash.
That is
Um,
awesome.
dude, it's hella risky, man. I don't know.
Yeah. Yeah,
Yeah.
definitely. But still, I mean, that's the power of leverage. Like, you were already up 70 or $80,000 essentially right now from your initial investment. So
Right.
you already have, even if you were to take a really big chunk of a loss like you did in March,
Mhm.
you're up insanely already all time, like 300% if I'm doing the math right, or just over
Yeah.
300% all time.
Mhm.
Who cares? Keep leveraging it. You
Right.
could even get safer and say, hey, I want to take half of this and stick it in Google and just hold
Right.
those shares forever, whatever. That's what I like about this style of trading. And I'm a big fan of leverage. I mean, I have my long-term portfolio and then I leverage about 25% of my portfolio.
Mhm.
So even looking at what you've been able to do makes me want to put more leverage down just because it is just crazy what you can do. And I've seen the results over the last couple of months. And yeah, it's definitely way riskier, but look at how much you're already up.
Right.
And you're playing both sides. You're playing the call sides on some, you're playing the puts. You're not just all in on, hey, I have this one Apple trade and I'm doing all puts $104,000 worth of put credit spreads on one Apple trade. So
Right.
that's what I like about it. You actually have it diversified. You have your pie chart that you show your gains through the year with, and how
Right.
your portfolio is diversified at that time. So you're actually playing it very smart compared to most people who just, hey, put credit spread. I saw that someone made money on this online. I'm gonna put it on.
Right.
I like the way you think about this. It's really cool.
Right. And I think that's one of the reasons I really like watching your channel too. Is just because you kind of teach or you kind of preach like understanding and like the meaning behind certain stuff. Like you don't just do a put credit spread because someone else did it. Like understand the mechanisms and the tools of the equity that you're trading,
Yeah.
like the pros and the cons. Like what are your weaknesses? What are your strengths? Um, and yeah, I think a lot of this comes down to just leveraging what credit spreads are as a tool. Um, your risks are always higher than your rewards. So when you're trading credit spreads, in order to make it work, you have to be able to get out quick if things go bad, so you protect your losses.
Yep.
And then if you're able to eke out as much premium as possible, whether it's through delta or whether it's through your perceived price action on the chart, then if you collect more premium per your collateral ratio, that just means that you can win less trades per every loss that you have.
Yeah.
So if I'm collecting 30%, 20% per se, to just make math easier, I can win 5 trades before I lose 1 trade to wipe out my gains. But if I'm only trading 5%, I have to win 20 before I can lose 1. And so you just got to kind of understand the tools that you're using.
Yeah,
Yeah.
100%. That is spot on, because that's exactly how I've been trading individual stocks. Like when we were talking about Amazon earlier, that was kind of the criteria that I went in with. I was picking a 15 delta trade there, And, for math's sake, that's about 6.5
Mhm.
times that I could lose or win before I could lose, right? Like
Right.
that specific trade. So it makes me feel a lot better than being at the 5 delta on it, to where I'd have to win that trade 20 times before taking one loss. So you
Right.
can manipulate that, and just
Exactly.
know that when you're entering the trade, like, am I feeling greedy right now? If I'm feeling greedy, I should probably wait 30 more minutes. But if I have the setup and I like where the stock is, I'll take that. I'll take that 80 delta or 20 delta and win 5 trades before I lose one for it to break even. So
Right.
that, no, I really like that. And yeah, we've had a very, very bull running market over at least 2020, but this year has been super choppy. But I preferred that because the condors I've been in have been pulling like 6% a week,
Right.
playing both sides pretty safely. So that's been super nice. And there's always
Right.
setup when one stock is super extended. Well, guess what? You can't do put credit spreads on it, but you can now do call credit spreads. So that's what I really like about it.
Yeah, for sure. And like even back here, the choppiness, like
Yeah.
I think that's something that is is really important. Just that you kind of got to fit the strategy to the situation. And so since I trade medium, I would say longer term spreads.
Yeah.
When the market is doing well, it does well, right?
Hmm.
When the market doesn't do so well, then it kind of gets you kind of bite yourself in the butt a little bit, especially if you don't give yourself either if you're not fast enough, or two, if you don't give yourself enough room or time for the
Yeah.
market to go through its paces. And so here, this is actually one of the reasons why I started extending out to 45 days, 60 days. It's just a lot of my spreads were just a week or two off. And so you see this giant dip here from 100 to 54.
Yeah.
That was just mainly because that one week I entered the trades probably too early. Here I was like, oh, the market started pulling back. I'm gonna enter my trades without actually just thinking about it. I was getting greedy. I was like, think about it a little bit, right? If the market's that far extended, probably wait.
Yep.
And then because the market's been going through its paces, and I don't iron condor as often as I should,
Hmm.
honestly, I wasn't able to hedge as accurately or as well as you've been doing recently, and so I was just losing consistently. I was just like losing. I'm like, oh man, what's happening here?
Yeah.
And so like this last 3 months have been just really rough trying to get some of those bad assets out,
Yeah.
transitioning to like more stable stocks and just like choosing the right stock more often than not is the recipe for success.
Yeah. 100%.
Um, yeah, lost 7 grand on Tesla, right?
Yeah.
I lost
Speaking of
6K on Microsoft calls, and
you can trade literally 3 to 10 stocks and have an insane return just because you
right,
know those 3 to 10 stocks better than any of the other stocks listed on the exchange, right? Just
right,
because somebody does really well with Tesla doesn't mean Tesla would fit that person's trading style, like the
mhm,
person who's watching that person do well. And it's same with anything. Like I said, I've told multiple people last year Amazon was the only stock that I didn't make money on
mhm,
because I just could not figure it out. Like I was trying. That's when greed was getting to me the most. Like just seeing a stock that's worth that much, you look at the deltas, like, oh, if this just moved $10, then this. And then I would play the earnings and try to condor an earnings position on it. And then I would just end up losing. And I was like, this just isn't for me. And this year I've done way better with Amazon, a lot more technical analysis behind it. But like last year, Amazon was not the stock for me, no matter how much I tried to trade it. So I really like how you touched on that.
right. No, I think I Peter Lynch says it pretty well. Like you should just really just trade the stocks that you understand. I know this is he said it for stocks in particular, like buying and selling stocks.
Yeah.
Like if you're in the restaurant industry, just buy stocks that you're familiar with. Don't buy like biotech stocks.
Yeah.
But I think that kind of resonates. If you understand the price action, or if you understand the movements of one particular ticker really really well,
Hmm.
then it makes sense for you as an individual to take advantage of that knowledge and be able to leverage it, whether it's through buying options or selling options, or even short term, buying stocks. You can leverage that price action that you're so familiar with and make consistent profit, as opposed to buying something that you're not familiar with. And that stock for me is Tesla. No matter what I do for Tesla, I lose money. It doesn't matter if I buy options, sell options, buy stocks. I just lose money.
It's so crazy because it's literally exactly the opposite. Like Tesla is probably my best return stock for me currently,
Mhm.
like individually, but besides the ETFs, because I
Right.
trade all the ETFs all the time. But
Mhm.
like Tesla, and then your best stock on the year is Amazon, and that's the one
Yeah.
I get screwed the most on. So it's
Right.
we literally have both sides of the coin there.
Yeah.
It's some sort of mental thing with it. And Tesla has become way harder to trade, I would say, over the last 3 months than ever
Mm.
before. Once it got super extended to like the $900 zone, I kind of really was in like paralysis mode because I had shares and I didn't really know what to do with it anymore because I was like, well, this is way too extended currently. But Tesla had gone from like $50 a share pre-split, we're using, or post-split number, like so like 200 pre-split all the way up
Mhm.
to 900 post-split. You're just like,
Right.
well, I don't want to bet against it, you know. So it's that's always the tough part with any sort of tech stock, and
Right.
I'm really curious to see how it continues to move.
Right. Like I think for me, like Tesla just isn't consistent.
Yeah.
And so a lot of times I'm trading it, I'm like, like, and sometimes I get greedy because other people, like, it's you're human, right? You see other people making a lot of money in Tesla, you see people making a lot of money on certain stocks. You're like, I should get in on that. I want to try it. And so like it fulfills my entry criteria, and I'm like, oh, let's do it. And then it just doesn't work out. You're like, what happened? Like I could have spent that 10 grand that I lost or 7 grand that I lost and just put it into Amazon. I would have at least made money.
Yeah.
Um,
It's
yeah.
that opportunity
So
cost, you know.
yeah.
But it's cool. I mean, I like how you trade Microsoft. I think that's one of the most consistent stocks over the last year, like in my
Yeah.
opinion, is Microsoft. And I want to trade it a little more, but the big tech stocks have just been awesome. Google, for example, one of my favorite stocks to do put credit spreads on.
Hmm.
When it comes down and tests the 9 or close to the 50-day, like it is just such a great stock, and it
Right.
makes really good revenue every quarter. So I'm not worried about something
Right.
coming out about Google saying that, hey, they were lying about their revenue or whatever it was, right?
Right.
Like, they're just such a good company, you know? Like
Yeah.
Google's literally making money right now from people watching YouTube videos. It's crazy.
Exactly.
Like that is the ultimate hand in the bucket, double dipping. Like it's crazy.
Absolutely.
So
Man, no,
cool.
I love those stocks. It's just, especially with those large retail, oh, sorry, institutional investment like funds,
Yeah.
there's just so much opportunity or so much volume to catch it when it falls.
Mhm.
So those levels are just so much more secure and so much stronger than certain levels that you see on like Tesla or more retail or less
Yeah.
um, large cap stocks. So it's just a lot more predictable.
Yeah, way more predictable. And that's the other thing, right? Like the majority of the money that's even in the market's indexed. And that's why I play index funds for
Right.
spreads, because it's like, I mean, the majority of the people who are putting their money in the market are just looking for that 10% a year
Exactly.
on
Yeah.
their money. And they don't care if Microsoft moves 5 points today or not. So why not be on that, on the put credit spread side of it and just super passively barely check it and focus on, living your life outside of building your account. And it's crazy. It's crazy what you can do, man. Seriously. I'm so excited to see the journey to 200K.
We'll see if we get there, man. The market's a little rougher nowadays. So
Yeah.
I was talking about this on my channel too a little bit. It's just you gotta fit the strategy to the to the market situations. And so one of my concerns nowadays is just whether or not the bull market's running out of steam.
Mm-hmm.
Not to say that it is, but if it is, then obviously the strategy has to change. You can't consistently play the put side 45 to 60 day out. You know, don't check it for a week and then close it the Monday of. And so that's kind of the one things that I'm actually pretty excited to see whether or not I can do well, because I've been trading predominantly in the last options, especially options. I've only been trading options in the bull market for the last 3 or 4 years, right? And
Yeah.
so we've never had a real opportunity to trade it in a less optimal environment. And so when that does come, I don't even know if I can keep this account above 50K if it does come. So it'll be interesting to see for
Yeah.
sure.
No, that's awesome. Like either way,
Yeah,
man, it's
yeah,
really awesome what you've built so far, and you
yeah,
can, when if you ever feel like you need to, just take some money off the table and just say, "Hey, I'm buying this stock instead." Like,
yeah. I think one thing that, like for me, I should probably preach this more in my channel. It's just that I think credit spreads are a great tool. This is just my own personal preference. Probably don't do 100% of credit spreads, right? It's a nice, I would say nice side income for you, but Yeah, I started this as just basically an experiment to try and see how far we can take it. Like for example, the 24K principle that I put in, I already took out another account, so I'm basically playing with house money at this point.
Yeah.
So,
Of course.
but exactly, but like not everyone's in the same situation where you're not playing with house money. And
Yeah.
so because my situation is slightly different nowadays than it was like 6 months ago, then I trade differently. A lot of I guess a good note or a good um reminder is just that if you see us do well, you should always keep in the back of your mind too that you should trade according to how your situation calls for. Because like for me right now, the reason I did this is because I work I wouldn't say 9 to 5, but a full-time job, and sometimes I work like so I work in consumer electronics,
Yeah.
and so I have to travel quite often to Asia, for example, before COVID. And so like I can't consistently and I have a lot of calls at night and I have a lot of the stuff. So I wasn't able to, day trade. I wasn't able to swing trade. I wasn't able to do anything actively. So in order for me to trade, I had to do it passively. And so this is one of the reasons why I started credit spreads. I started doing selling calls, selling puts, is that was a more passive way of investing. Right. And so I think a part of it is just understanding your situation. And if you're able to trade more actively, then maybe that's the way to go. Do it. If you're not able to, like me, then do 45 days out, do 60 days out. You can even do leaps, right? Because leaps are a year out.
Yeah.
So like you can do whatever you want, but you just got to fit it to the way that you feel comfortable doing it because everyone's circumstances are different.
Yeah, man,
Yeah.
100% agree with that. That's something I've noticed too as of recent. That's the thing with money and compound interest. Like, of course, the more money you have, the faster you can grow it, but you're also putting more risk on the table every time. And are you able to handle that emotionally? Like, I don't have kids. I'm 21. Be aggressive because I'm young. Like, I have
Right.
time. But if I was like, 50 and I wanted to retire in 5 years or something, or 60, wanted to retire, I probably wouldn't be putting as much into credit spreads as I currently do,
Right.
just for my sake. But that, it's just that timing and the situation you're in.
Exactly.
Awesome,
No.
man. Is that everything you want to touch on today? Is there anything else you want to chat about?
Yeah, I think that's it. I'm not exactly sure. Is there anything else? I don't know, man. It's the first time doing this. So you let me know.
Well, I'm definitely gonna have you back on in the future for sure. Because I want to see how your account's doing, every few
Yeah,
weeks or so, whatever time
yeah,
permits, man. And
for
if you ever
sure.
want to, we could always do a video on your criteria for entering
Right.
them, with like a Google Doc or something and
Yeah.
charts and all that. But I think this is a great first video, and I really appreciate you coming on.
Dude, appreciate it, man. Once again, thanks for having me on. It's always nice talking to someone else in the community about just trading styles, right? Learning your strategies and how you maintain your account or how you play certain stocks. It's always fun to talk to other people in the community. So appreciate it. Appreciate the opportunity.
That's going to be everything for us in this video, guys. I really appreciate you coming back on, man. Like I already said it earlier. And if you guys could leave a like, a subscribe, comment below in this video, check out Credit Spread Investing. The link to his channel is down in the description, and I can also pin it in the comment section. So you guys can go check it out. We're going to have him back on. Leave some questions that you guys have below for him on his account, how he's done it. There's certain questions you have about it. And we're going to continue to create some videos for you guys. So that's going to be everything for us, and we will see you guys in the next one.